Now recording. So welcome everyone again to today's session, and we will start off this third financial session with a land acknowledgement, taking some time to express our gratitude for the ability to communicate, to be able to hold this workshop today. The majority of the people I think on the call are within Ontario, and myself are from the Oshawa area, which is the Scugog Island First Nations people. So recognizing how grateful I am to be able to be calling in today, as well as grateful for all of the technology that we have, the laptops, lights, computers, internet, all those things that often require resources that tend to be taken from traditional territories around the world. So recognizing and taking a moment to express our gratitude to be able to share this today. Okay, so I will give a bit of an overview on the agenda for today. So as you all know, it's our third installment of the financial workshop series with Madeline Clark. So I'll do a brief intro on Madeline because a lot of people are, have been to quite a few of these before. So you may have already heard her bio, but I will give a brief one on Maddie. And so she is a market gardener, chartered accountant, and also a corporate finance manager. And she co-owned and operated City Beet Farm in Vancouver, BC. So not from Ontario, but has a lot of experience in BC. And did this for over 4 seasons and ran an 82-person CSA, which also included a weekly market and did online sales of vegetables and cut flowers. Maddie is passionate about empowering farmers and creative entrepreneurs with the financial skills that will help them build their business. She's also developed financial planning courses for farmers and small scale producers, along with the Richmond Farm School, the Tsawwassen Farm School, Vancouver Community College, Young Agrarians, and the Bell Academy. So we are so excited to have Maddie again here with us today to impart upon some of her wisdom. So without further ado, I'll hand it over to her, and at the end we'll have a Q&A period, and at the very end I'll send out a short poll for everyone to fill out, so it helps us set up as good of sessions as we can to help everyone grow and learn a bit. Okay, so I will hand it off to Maddie.
Thanks, Dee. I can share my screen. All right. I like to keep all of these workshops pretty casual. I think I've met many of you in the past, but if we haven't met before, I am Maddie. I'm calling in from the traditional territory of the Ucluelet First Nation, which is actually on Vancouver Island. So I'm not in Ontario, but I am from Ontario. So very familiar with where everyone is here. And as I mentioned, I'd love to keep this fairly informal. So if you have any questions, feel free to just pop them in the chat, or you can come off mute and ask as we kind of go through things. So the topic for today is we're going to talk a little bit about finance operations, which what that means to me is what systems and best practices we can use to try and automate things or do as little work as we can with the finance side of our business, so that we can focus on doing the things we're good at and the reason that we show up as food entrepreneurs. And I know that I've met quite a few of you, but if we've never met before, I have 4 years of experience owning my own farm. And then since then, I've been sort of building out this educational side and trying to build financial literacy skills with other farmers, food businesses, and creative businesses. The farm that I had started out, when I first started out, we started as a 60-person CSA, and that's really all we did. So it was set up very similar to what you see here, just outside of a coffee shop. We had a partnership with them. It's an urban farm, so we actually didn't pay for the use of the land. We traded the land that we used in Vancouver for vegetables, and that allowed us to start out and run a CSA. Then from there, we kind of progressed every year. So we grew to be an 82-person CSA. We had weekly markets, and then we built a online store through Shopify, and that allowed people to order online. And this was super key in the early part of COVID in 2020, when People weren't super comfortable coming to the market all the time. It was really nice for them to be able to order online, and then they could just come pick up their box and leave pretty quickly. So that kind of progressed nicely, and we kept doing that after that point in time. We also just continued to build our relationships with other coffee shops and restaurants and things in Vancouver. So we started out doing some weekly pop-up markets and just really like testing the waters as to like what made sense for us and where we should show up in the city. So we did these pop-up market series and partnered with a really great cafe that had a lot of foot traffic and like quite a big social media presence. And so that was really helpful for us to get our name out there and sort of start something that was really different rather than showing up to kind of like your traditional farmers market every Sunday. You could find us on our own, and we really built like a community space, I would say. So we kind of started with these pop-up markets, and then we started doing that every single week as well. And that was really successful and allowed us to run a market at the same time that we were doing our CSA. And then whatever we didn't sell through our direct to consumer channels, we sold through wholesale. We would usually send out what's called a fresh sheet. So just says everything that's available, what our prices are, what our suggested retail prices. And then that would go out the next day based on what we weren't able to sell directly to our customers. And so I'd love to know, like, as we kind of craft our discussion today, for those of you who have been at other workshops in the series so far, we've talked a lot about pricing and then what it means to be profitable, how you can kind of play into that profitability piece. And so today I'd love to talk a little bit about operations and like how you can kind of scale your farm and get there and have the systems that work for you. So would love to know in the chat, maybe if you have any thoughts around what you find most challenging with managing your business finances, and what you would like to get out of the workshop today. So feel free to either come off mute or you can just put something in the chat as well.
Hi there. Yeah, hi, I'm Judith. And for me, I was going to start typing in the chat, but I may as well just say it is, for me, it's like I'm still in the startup phase and it's cash flow, right? I'm just starting my CSA and there's a lot that has to go into it to market it and get really, because it's a big ask, like a big financial ask. So really just, along with everything else, but also just, the costs, the expenses leading up to when things start flowing, the cash starts flowing in June, July, but up until that point, there's so much upfront costs. And like, how do you finance that? How do you, you know what I mean? How do you make it work?
Yeah, definitely. In my experience, there's kind of like a few different ways you can make it work. I think having a CSA can be, yeah, exactly, very helpful for that. Of course, there's some upfront marketing costs and needing to get your name out there and like, build those relationships with folks, which is especially difficult in the early days of your farm until you're kind of, I think once you've built those relationships and you find that sort of like word of mouth help too, that can really be essential to having a successful CSA. But for us, having a CSA really allowed us to have like minimal debt. So that's like really why we went with that model as opposed to trying, like, CSAs can be also stressful because you have an upfront commitment and you need to make sure that you're, delivering the same amount for however many people you have every single week. But the great thing about it is we would put ours on sale in January, and we would do it on our website, and you could either pay the full amount or you could pay over like 4 installments. So your credit card would get charged every month over 4 payments. And we didn't charge anything extra for that, just because I felt like that was a piece that allowed us to have a little bit more accessibility by being more flexible on the pricing. But the great thing about that is by putting our CSA on sale in January, even if someone chose the 4 payment method, that meant that like we had collected most of the cash by April, right? So that really is what I found to be very helpful in terms of getting like compost, seeds, amendments, labor, all of that. So that was one thing. And then I think also just being comfortable with, as many of you are here, like Fair Finance Fund has great loan opportunities, and being comfortable that like business debt isn't the same thing as taking on, a bunch of personal credit card debt. It's like really a tool. So having either a loan to help you get started so that you're not, working 100-hour weeks and like burning yourself to the ground just trying to make something work, and you can buy the infrastructure that makes sense for your farm or food business right off the bat. Yeah, just thinking about like different financing tools that might work for you, whether that be a startup loan or something like a line of credit where, for seasonal businesses, we will see a lot of the upfront or a lot of the cash flow through those big months like, July, August, September, October. And so having some kind of a tool like a line of credit or a loan that allows you to cash flow to that point will definitely be super helpful. But it sounds like you are on the right track with starting out with a CSA. I think if you are struggling with cash flow, that's probably the best way to go. And then you can also see if maybe some other types of financing tools work as well. We will be doing another session that's specifically on cash flow next week too. So if that's something you're struggling with, I definitely recommend coming to that one too. Awesome. And then in the chat, Nico says, problem with farmers is that we buy at retail, sell at wholesale, and pay for the freight both ways. I'm assuming you're meaning like your inputs, like seeds, all of that kind of stuff is like at retail prices. Yeah. And then if you're selling wholesale, that definitely is a little trickier. We talked about this a little bit in the profitability session last week, but for my farm, we were quite a small scale farm, and we always found it most helpful if we could sell as much as possible direct to consumer so that we could get retail prices. So for us, that was a CSA in a market, and that might not work for everyone because sometimes it's also easier if you are just selling to one customer through a big wholesale order. Maybe that allows you to free up some time and efficiency for doing other things with your food business. But yeah, that definitely is helpful in terms of getting the most out of your margins. But food businesses are tough and the margins are not high. So finding different ways that you can kind of like diversify your income stream, whether that be, doing things like farm tours, or if there's other opportunities that you have to be able to increase the revenue of your farm or food business, I think that's always a great way to think about things too. Awesome. Lots of good thoughts. If you have anything else that kind of comes up as we're chatting, I'll monitor the chat. So feel free to put any questions that you have or thoughts in there too. So for a lot of us, I think most of us have like already registered our businesses and are a little bit more established, but this is really like the first stepping stone to getting started. So if you haven't done some of these things, I really recommend that you do. So first, just making sure that you've registered. And if you are registering your business for the first time, or even just like rethinking this, trying to think about what kind of business structure you have, and I'll chat a little bit about that too. So whether that means you're a co-op or a sole proprietorship or a corporation, make sure that you're separating like your personal from your business. So, we're operating businesses, so it's time to take it seriously and make sure that we have a separate small business bank account. Register to collect and remit taxes. So we'll chat a bit more about this through the lesson, but this could mean that you're registering for GST as well. And that's always something I really recommend, even if you haven't hit the threshold for farms and food businesses, because we fall into something that's called zero rated. So we don't have to charge GST on our products, but we have the benefit of being able to claim back any of the GST that we've spent on our inputs. And that can end up being like a few $1,000s every year. So definitely worth doing. And then making sure that you're applying for any business licenses. You're thinking about if you're hiring folks, you have set up workers' compensation and payroll, and then getting your business planning and financing in order. And then once you've done all of those things, that's when you're like really up and running and you can start spending and selling as well. So when you're choosing your business structure, I think a lot of you probably already have a structure in place, whether you've chosen, most people are probably a sole proprietorship or a corporation route. But really there's kind of like 5 different structures that you could select. And one reason you might want to go with a corporation for a food business is just like some of the risk that's associated with selling food. So especially if you have, like a retail store, or you have a lot of equipment, or you're running a commercial kitchen, all of those things have a little bit more risk associated with them. So if you choose to incorporate your business, even if you're a sole proprietor today, what that will allow you to do is separate your personal risk from the risk of the business. So I always like to, get people thinking about that, even if you're just getting started. It might make sense for you to run your business as a sole proprietor or partner in those early years, but as you're starting to, bring on employees, get more equipment, and increasing the risk profile of your business, that might be something worth thinking about and seeing if you could incorporate. I think a lot of folks would not be a nonprofit here, but the reason that I also call this out as a structure is that in my experience, nonprofits have the most grant funding available. So for a lot of us, there's a lot of grant funding that is available for our businesses that are related to hiring people or building infrastructure. Those are the two areas that I've found the most amount of funding. So that could be another cash flow consideration, is making sure that you're applying for things like, if you're bringing on employees, things like Canada Summer Job Grants, or there's also lots of farming and food specific grants that are out there. There's also a lot of grants for building infrastructure as well. So if you have a specific project, often you can kind of frame the project in the sort of like objectives of whatever the grant funding is, and then you can find a lot of great funding opportunities that way. So an example of that is that I built a processing station. So it was like a mobile cooler that allowed us to process our vegetables outside. And there was also quite a bit of grant funding available for that infrastructure project. So definitely always worth it to do your best to look for some of those. And I've also just found in the nonprofit structure, there's lots of other grants that are available there too. And then cooperatives make sense if you and a group of people are looking to have sort of mutual benefit that is less focused on like an ownership structure. So in a traditional, corporate structure, you would have shareholders. So maybe you and one other person each owns 50% of the business, and then you share 50% of the profits based on your ownership percentage. Whereas the nice thing about a cooperative structure is that if you're, for example, set up like a producer cooperative, you could split the profits based on how much you have brought to the table. So how much you've actually, labor you've put in, or how much food you've produced, or whatever sort of mutual agreement that you come up with for your specific cooperative as well. So most of you probably already registered, but just make sure you do that if you haven't already, and then think about it from the corporation perspective too, if that's the next step that you want to take in your business. And so, as I mentioned, sort of the kind of key areas of why you might want to incorporate your business is to reduce your personal risk. And there's also some tax advantages on income if you're planning on keeping the income in the business. So as individuals, we pay tax on the portion that we would take out of our corporation. So you would pay a corporate tax rate, and then you pay a personal tax rate once you take your money out. But if you're planning on, keeping your money in the business, reinvesting in the business, then you wouldn't have to pay personal tax on that piece until you take money out. So that's something that's definitely worth considering if you're just building up your business and you're keeping a lot of your profits inside of the business as well. You're not planning on, paying yourself a very big salary in those early years, or if you have off-farm income as well. It can be really advantageous to set yourself up this way. But then one thing to consider is the cost. So there definitely will be a higher cost to incorporating, and it's also just in terms of financial operations a little bit more burdensome. So every year you'll have to do corporate taxes in addition to your own personal taxes, and there's just a little bit more work in terms of the financial reporting aspect, and you'll probably have to hire an accountant as well. So just if you have a really low risk business, or you're really just getting started, it might not be something you want to do right now, but once your personal risk gets to that point that it really makes sense for you, then I would really recommend taking that next step. So once we've done this, I think some of you might be familiar with this, but this is kind of how I think about how I operate from like a financial perspective. So I think a lot of people have this relationship to finances that they, build a budget and then they are done, and that's kind of it for the year. But really, I'd encourage you to think of finances as kind of this iterative process that we're always getting better at, and we're always building habits around. So the first piece would be planning and budgeting. So if you're just getting started in your business, I would recommend starting there. So that's setting out a business plan, creating your first budget that you've ever built before, and then like managing that cash flow. So maybe you're building an operating budget and you're building a cash flow, which we'll do next week. And then you've also got a pretty solid business plan, especially if you're, applying for a loan somewhere like the Fair Finance Fund. You've already had to do a lot of this work. And so I would encourage you to think about this as like also for your benefit. So if you've built a cash flow and an operating budget for the purposes of getting a loan, the great thing is that you can start to track against that every month. So what I would do is at the end of each month, you have new data around what you've sold, you have data around what your costs were, and you just have all of those points of information. So you could spend maybe half a day or a few hours looking at how you actually did as compared to that budget that you set out for yourself. And what that does for you is it gives you really good information to improve and reforecast and pivot if you need to, so that you can make like better strategic business decisions. And really what it does, it helps you kind of get away from this like operating your business on intuition or like with a finger in the wind, and helps you be able to think a little bit more strategically and follow the numbers that you have. Then the bottom two sections are selling and spending, and then reporting. And those two sections are the ones I like to automate as much as possible. Like I don't want to be spending my time inputting receipts or, recording every single sale that I make. So I do my best to really connect as much of my selling platform. So let's say I'm using something like Shopify or Square is probably the two most common things that people use. You can connect that directly into your bookkeeping software so that you're not touching anything and it's just recording all of those transactions for you. And that will really cut down on the amount of time that you're spending, doing some of these really like not very value added tasks. And once you've sort of automated the selling and spending, you've built a bookkeeping system so that you can just get some reports at the click of a button. That allows you to spend your time where it counts, which from my perspective, in the sort of financial world of our business, we want to be spending our time on the strategic piece. So looking at how we're doing against our budget, seeing if, there's some certain costs that we could really react to or see differently, or if there's ways that we need to pivot and make changes in our business to be more successful and, build a sustainable and thriving business for ourselves. So some things that you might want to start thinking about when you're thinking about your financial operations is systems. So the objective of a system is to, first of all, like automate as much as possible. So you're not doing, a lot of manual work and just kind of adding so much more time that you're spending on the financial side of your business and not really adding a lot of value. And then also just, giving yourself the insight and information to like clearly understand your business performance. So if you use a system like Square or Shopify and you have your sales organized by like, let's say wholesale and CSA and markets, for example, then it's really easy for you to run a report every month and see how your sales for each of those three areas have trended against what you thought you were going to do. And that makes you better and better at planning for the future as well. The other thing too is if you have employees, you probably want to set up a system for payroll. So a lot of folks use QuickBooks or Wave, and then you will also just want to bring everything together in a bookkeeping or financial reporting tool. Like probably the most common one is QuickBooks, but I know there's also Xero and FreshBooks and a few other systems out there. If people are comfortable, if you use any systems, it would be great to just hear what you're using. So if you want to put anything in the chat, I think everyone always appreciates hearing what other folks are doing as well. I can speak from my own perspective on my farm. So our website was built on Shopify, and then people would order from our CSA on our website. And that was directly connected to our bookkeeping software, which was QuickBooks. So pretty much if we made a sale, it would push from Shopify into QuickBooks. And then at the, in a given time, like on any day, really, I could pull up my QuickBooks and I could see a summary of how my sales are doing. And I could also see that on Shopify as well. So most different softwares have like analytics tools that you can use so you can track your sales. And then you can set yourself, monthly targets, or, if you want to get more granular, you could set weekly targets and then kind of track against how you're performing. And that will really help you stay on track, but really whatever works for you. The other thing I would say is just like the best systems that you can have in your food business is the systems that you'll actually use and that makes sense where you are. So I don't think it's a good idea to, take on too much at once. Don't implement like 3 new systems if you know you're not going to use them. So if you're not ready for using systems, there's nothing wrong with just like starting with, a spreadsheet or a notebook and then going from there and progressing as you start to get a little bit more comfortable with this stuff. And then a lot of folks too will use Square, or there's also like a few other different point of sale systems at their markets or in their restaurants. So depending on what you're using, again, it would be very similar. You should be able to see tons of information around like the specific products that you're selling and however you choose to categorize your sales, so that you can start to track and have good information for you and kind of like an automated way of doing things as well. So as I mentioned, I think the best processes you can build are the ones that will actually work for you. So something I would also recommend is like not just thinking about the physical systems that you're going to implement, but like when are you going to do the financial side of your business? Because as business owners and entrepreneurs, there's like a million other things to be doing. And I'm sure that your farms and food businesses take all of the time that you will give it pretty much. So something that I would recommend is whether that means like, Friday afternoon at a certain time, you spend time working on the financial side of your business. Or something that also worked really nicely for me was that my farm was like so busy from, May until like the beginning of October. So I would do my best to set myself up for success through the winter months and then have a lot of these systems that are really like automating a lot of the transactions. So I can just keep my eye on cash flow, but I'm not spending a ton of time on the financial side of my business. And then come October, when we would kind of close down for the season, I would spend like a few weeks going back into this information, like really analyzing it and then making any adjustments if anything seemed like it was off. So that's something else that could be, a way that you can make things work for yourself. Just your businesses better than anyone. So I really recommend building systems and processes that are going to work for you in the long term. And there's also nothing wrong with using something like Google Sheets or just like a notebook if that's where you feel like you're at right now too. So once we set up these systems, so let's say we have something like QuickBooks or another bookkeeping tool, we kind of have to think about like, there's daily activities that are happening in our business. Like someone shows up to your farm stand and they want to buy something, or you go to Home Depot and spend money on supplies. Like how does that actually end up on your financial statements? And the way that happens is in your bookkeeping software, you will set up different categories. And then like, let's say you make a sale through Shopify or Square, as we have up there, then it will push directly to your QuickBooks because you've set up different categories. So we'll go through that a little bit too. So a few things that I would encourage you to think about in terms of setting up your own bookkeeping that we'll just go over now is, first of all, it will bring your financial performance into view. So it allows you to really keep tabs on like, how is my cash flow doing? How am I performing in terms of sales compared to where I actually thought I would be? Or how am I performing year over year? That's always something I like to look at as well. It also sets the foundation for financial planning. So I think a lot of us, when we start to get comfortable with financial information, we feel pretty good about like talking about what just happened last month, but we never feel that great about building financial projections of where we think we'll be in the next year. And a lot of this work of understanding your own finances every month, telling yourself the stories of what's happened with your business will really set the foundation for you getting better and better at this process. And then you can build better projections as well. It also helps you catch any financial errors. And then it also helps you catch more tax deductions as well. So if you, forget a receipt or something like that, or you're not on top of your bookkeeping, it can add up. And by the end of the year, you might not be deducting as much as you could for your business expenses as well. So the way that it actually will show up on your income statement is through setting up your chart of accounts. So when we set up a bookkeeping software like QuickBooks, for example, every transaction will need to fall into a different category. So we have, if you have been at some of the previous workshops, we've talked a little bit about this already, but the different categories that you would expect to see are assets. So that's what you own, liabilities being what you owe, equity is what you put into the business or like the owner's stake in the business. Revenue is the sales numbers, and then expenses would be the cost of goods sold and also your operating expenses that are sort of keeping the lights on in your business. So I will show you here an example. So if you look here, there's kind of an account description and then an account type. And the account type ties back to what we just saw there. So you can see under account type, it says assets. And then there's different account descriptions that will link to those assets and that will show up on the balance sheet. So basically the first step for you to set up your bookkeeping is to get a software like something like QuickBooks, and then to build categories that actually make sense for you to track. So, you know, I don't recommend building tons of complex categories just because you feel like you should do it. I would think about like what is useful for you? How do you want to track your business? So if I think back to my own farm, the ways that I sold where I had a CSA, so I would definitely want to set up a category for CSA income. I had weekly farmers markets, so I would set up farmers markets. We had wholesale, and then we also had online sales. And then we also did farm tours. So I would set up farm tours separately because I don't really find it useful for me to muddy up all of that income. And then I don't have a good idea of like, what are the margins on these different categories of my business? So if you are a farmer, for example, who maybe does like livestock, and then you also do flowers, and then you also have like an ecotourism side of your business, I would really recommend that you set up categories so that you can track each of those individually. And that will give you great information in terms of like what is profitable in my operation and where should I lean in, or where am I not performing as well as I thought I might. So this is an example. I've used the same example the last few workshops as well, just so I think it's something that people are getting comfortable with. Don't lean too much into the numbers. It's just all an example here, but here you can see we have different categories of income. So subscription or CSA income, we could do tours and workshops, flower sales, grant revenue, market sales. So each of those different categories would need to be set up in my bookkeeping software. And then essentially when I make a sale, it gets tagged to one of those categories and then it automatically shows up here. So I could run this report like at any point in time and get some really good information about how my business is performing. And then similarly, you have cost of goods sold. So those are all direct costs of production and selling. And then the last part is expenses. So if you had, you know, to go to Home Depot, spend money, what you can do is just use an app on your phone, or if you're coming home at the end of the week and you want to manually input things, you just tag everything to a category and then it will show up in a nice presentation for you here. And you can really use this information to, first of all, like assess your own business performance. Then you can also use it for tax information. And then I also like to use it to track against how I thought I would perform and really make strategic decisions around my business. So if I'm looking at this, some things that are really sticking out to me would be, I can see that my payroll expenses are $38,000 and my total expenses are $47,000. So for me, I know that it would be really useful for me to spend most of my time with understanding my labor model and making sure I really have my payroll expenses dialed, because that's going to have the most impact on my profitability. Similarly, if I look up at income, I can see that a lot of my income is coming from grant revenue. Let's say we have $36,000 that's coming in from grant revenue, and then payroll expenses of $38,000. So I would assume that's probably grant revenue to cover some of the payroll. But the thing about that is like sometimes grant revenue can really fluctuate year to year. So that's something I might keep in mind if I'm doing my financial projections for next year. I'm going to be really thinking about maybe I can't depend on that $36,000 coming back again next year. So I need to think about other ways that I can increase my income if I want to make sure I'm maintaining the same level of profit. So this is kind of the real benefit of setting up good financial systems is that you have amazing reports like this that allow you to really understand and dig into the numbers behind your business performance. I also really encourage you to remember, like, I know a lot of people work with bookkeepers and accountants, but remember that like no one knows your business better than you. So it's important to feel confident about what the stories behind your numbers are. Like if I think about this example here, let's say I had like really elevated payroll expenses in my last year of farming. I know that that's because my partner, business partner, went on maternity leave, for example, and I had to spend more on labor that year. Like an accountant who's working for me isn't going to have that information, and they're not going to know the stories about like what is driving certain things in your business. So they wouldn't really be able to help you build like the most solid projections or create a budget as much as you have all this insight and information around how you're growing your business, what happened this year, what are all the different red flags that you're kind of seeing in the numbers, and how does that relate to things that happened in your business this year. So coming back to this financial cycle, so this report that we looked at here is the income statement. So I think most of us are sort of starting to get a little bit more familiar if you've been following the workshop series that we've had so far. And this falls into the reporting side of the financial cycle. So again, I've mentioned this, but we've tried to automate as much as possible. We go into QuickBooks, we hit reports, and then we can go to the income statement or whatever bookkeeping software you use that will have the same capability. And then you can use this information to be able to, let's say you need to report your financial statements if you've taken out a loan that year, or you need to file your taxes. This is sort of the starting point for your taxes. And then similarly, if you've filed for a grant, sometimes they want to be able to see your financials there as well. And then we can use that information to analyze it and think about strategic future decisions for our business. So I wanted to also kind of pivot here and talk a little bit about the tax side of our business. So we won't go too much into detail on taxes here, but I just wanted to kind of go over a few key things that you might be thinking about, because it is such a big part of the financial operations side of our business. So first of all, if you're just getting started, I definitely still recommend, keeping all your receipts and starting to set up some of this bookkeeping ahead of, even if you haven't made a sale yet, because the CRA will consider your business to have started when you have like significant activity that's getting the business going. So let's say, for example, that you are starting a restaurant and you haven't actually made a sale yet. If you've invested in inventory, or you've spent money on like commercial kitchen equipment, or you have incorporation costs, all of these things, you can still expense these items and for tax purposes. So just something to keep in mind, that even if you haven't made a sale yet, your business might have already gotten started. So some of the things you'll maybe want to look out for as you're sort of setting up your business for success on the operations side is you can claim anything that is considered a reasonable business expense. So some questions to ask yourself is like, is this actually a business expense for my field? And then thinking about like the nature of the expense and the reasonability of the cost. So let's say you're a farmer and you go to a farming conference, that would definitely be a business expense. But if you chose to stay in like the most expensive hotel, for example, like that's not really a reasonable business expense, because there's no reason that you had to stay in the most expensive hotel. So, obviously use your common sense, but just keep in mind that I know like for a lot of us as like entrepreneurs, and also specifically in farming, sometimes like your personal life and your business can feel very intertwined. So just keeping in mind, like asking yourself if it's a farm related expense, then yes, it should be tracked as a business expense. And then if you're using something like your phone or your internet for both personal and business purposes, you can still claim the portion that is used for business purposes as a business expense. So keep that in mind too, and kind of do your best to track all of these things. In terms of like practically tracking a lot of this, what I do is like I have both a physical folder that's kind of organized by month to just throw my receipts in. And then I also digitize all my receipts too. So you can kind of like figure out what system works best for you. But for a lot of people, just like scanning or taking a photo of your itemized receipts and then having a folder on your computer that you're dropping those into maybe by month is really helpful. And then when you go to do your taxes, you're like already organized for it. And then also like you'll often have, you know, physical receipts as well. So just making sure you have like somewhere to store those and they're not just like sitting in your center console of your car or like, you know, in a giant box somewhere or whatever you choose to do. You know, try your best to just like be organized so that it just takes some of the burden off of you later when you're actually trying to do things like file your taxes. So some things that you might want to keep track of and keep your eye on are things, as I mentioned, like startup costs. So even if you haven't made a sale yet, your business might have already started. So keeping track of those and considering them as business expenses. If you're using your house, you'll be able to claim a portion of that cost for tax purposes as well. So just, you know, understanding like, I just recently filed my taxes and you use like the square footage of the space that you're using for your business compared to the square footage of the rest of the house, and then you're able to claim a certain portion. So keeping that in mind. If you're using your personal vehicle, you should set up a vehicle log. So something I'll do is I'll just take a photo of the odometer before and after like a business related trip, and then you just know the portion of your mileage that relates to business expense. And then other things like shipping costs or insurance, legal and accounting fees, all of those types of things. One thing you might want to keep in mind is that if you have like any, you know, meals, let's say like staff meals, or if you go to a farm conference or something like that, only 50% of that is deductible. So that's one there where you'll have to just make sure you're tracking it separately. And then when you actually come to filing your income taxes, just keep in mind that as small business owners, if you're a sole proprietor or a partnership, you have a different tax deadline than, you know, the rest of us in Canada. So people who are just working, you know, a regular 9-to-5 job, most of those folks would have a deadline in April, but as self-employed people, we have a deadline of June 15th. So that gives you a little bit more time to get organized. I would recommend working with an accountant or just using a software that really like walks you through all of the steps. And then you can, the starting point that you ideally want to get to is, again, being able to use this income statement. So if I've set up my bookkeeping software and I have everything organized, when I go to actually do my taxes, I'm saying, okay, I know exactly what my income is. It's $106,000 on this sheet. And I know that that's 100% business related. Have most of my costs already outlined here. And then the only thing I need to layer in on top of that are like specific tax deductions. So thinking about like those vehicle logs, or if there's anything that was, you know, split between business and personal that might not be showing up in my bookkeeping. It just makes it so much easier for you, and you'll have way less of a, you know, boring and like stressful time doing your taxes, because I know everyone always hates that time of year. So as I mentioned, like make sure you're keeping and tracking your expenses. So we have to make sure that we keep our itemized receipts, not just like your credit card statement. And you'll also need to keep records for 7 years. Similarly, on the sales side, like if you're using something like Square or Shopify, it's doing a lot of that work for you. But if you are, you know, making a sale over e-transfer, just make sure you have some like documentation to back that up. And then for vehicles, you'll use a vehicle log, as we chatted about. And then the last thing, especially as farmers and food businesses, is that we often invest in a lot of like big infrastructure or equipment, and that won't show up on your income statement. That will be on your balance sheet under the assets category. And one reason you really need to make sure you're tracking that is that when you file your taxes, it falls into something called capital cost allowance, which is basically just a category that the government gives you based on the type of asset that it is. So for example, if you purchase like an oven or some commercial equipment, commercial kitchen equipment, it will be, will have like a specific category, and then they tell you what the percentage that you can deduct each year is. And the reason that you don't deduct like all of it at once, so let's say you spent $30,000 on commercial kitchen equipment, you don't deduct all of that at once because it's going to be useful for your business like for a longer period of time, right? Like it's an infrastructure investment. So let's say it has a useful life of like 5 years, you're using it over 5 years. And similarly, you would be deducting a portion of the expense each year. So that's just something to keep in mind that looks a little bit differently than the like day-to-day expenses of, you know, spending $200 on like inventory or something like that. I mentioned this earlier, but like a tip I also always love to give food businesses is like, even if you haven't hit the threshold of earning $30,000, so that's the threshold that we need to start registering and charging GST if our business needs to charge GST. But as farmers, we're something called zero rated, which means that we don't need to charge GST on vegetables. You do need to do it on flowers, so that's just something to keep in mind. But if you're not charging GST on vegetables, the great thing is you can still claim all the GST that you've spent. So let's say you're just getting started, you're not earning $30,000 yet, but you're making lots of sales at your farmer's market. You don't need to charge extra GST to those customers. But the great thing is if you register for GST, you can claim back everything you've spent on, like, let's say you bought a truck or you have seeds or compost or anything else that you've had to pay GST for, you can claim that back, and it really does add up. So I think that's just kind of a little tip that I always like to make sure I'm flagging for food businesses and farmers. And when you're doing this for the first time, it's pretty simple. You just register online, and then you'll basically say the amount that you've claimed for GST. So let's say that you have charged for flowers or some kind of item, and you have like a few $100s that you've collected for GST. The second piece is that they'll ask you for input tax credits, which is the thing I just mentioned, which is like how much you've actually spent on products and that you want to claim back. And then the difference is what you either pay, or for most of us as food businesses and farmers, we will be able to collect that. So we'll end up getting a lot of money back, which is really helpful. And then the last type of taxes that you'll want to think about is payroll taxes. So just making sure when you are, sorry, just one question on GST that I'll start with first. So Judith says, can you backdate any GST purchases? I registered in June, but I started my business in May. That's a really good question. As far as I know, I don't believe you can backdate your purchases, but I think I can follow up on that and just double check with GST. I know when you're claiming business expenses for just like regular income tax purposes, even if you registered your business later, you can still claim those expenses as long as it's in the same fiscal year. So that might apply on the GST side as well. But let me just double check that for you, and we can get an answer for you when we send the follow-up email with the slide deck and the reporting and all of that as well. And then, as I mentioned, the last piece for taxes is thinking about your payroll taxes. So I know for a lot of folks, like hiring someone can be really overwhelming. I really recommend thinking about bringing on help a little bit earlier for farm and food businesses, because there's a lot of grant funding that is available for hiring folks that we often don't get access to unless we bring on help. So something like Canada Summer Jobs, for example, or there's also a bunch of like Agriculture Canada grants as well that are available. I, as a farmer, was almost able to cover like 100% of my payroll expenses through grant funding. And it's definitely a little bit more work up front of applying for all of these grants. Usually you need to apply around like this time of year. But the great thing is if you are able to be successful, a lot of the time it can cover like most of your payroll costs. And the nice thing about bringing on help as well is that it allows you to focus on some of the more strategic parts of the business. If you don't need to be spending like all of your time processing your vegetables, or maybe doing like prep work if you are a restaurant, then that allows you to have more time to like build relationships and think about like the longer term strategic side of the business. So that's just something I would maybe keep in mind as you're starting to think about like growing your food business. So to be able to do that, you really just need to collect the right information from the people you're bringing on, and then making sure that you're making the right payroll deductions each pay period. And there's tons of information on the CRA website about this, or you can also use a software, or a bookkeeper can always help you as well. So if you have any more questions or things that you want to learn about taxes, I know this is like always a hot topic. People always want to like really understand how to make the most of this. I would recommend you can head straight to the CRA. So I'll send some links out when we send the reporting and the PowerPoint here. There's also a great resource called Grow CPA, and they put out like a full tax academy, and that kind of goes through filing your taxes as a sole proprietor, and they're based in Ontario as well. I think they're based in like the Bracebridge area. And then also just working with a CPA. And like my biggest tip, if you're going to an accountant or a bookkeeper, is just try and do your work ahead of time in terms of like understanding your own finances a little bit, thinking about what questions you want to ask, and like just go in with confidence and remember that really you know more about your business than anyone else does as well. So the last topic I kind of wanted to talk about today is strategic planning. So we don't have a ton of time. We only have about 7 minutes. So I'll just quickly go through some of the topics we talked about last week around setting financial goals. And if you weren't here last week, you can always get the recording from the Fair Finance Fund as well. And we'll then talk about how to start to think about strategic planning and looking forward for your business. So the first piece we talked about too was setting financial goals. So once you have sort of a vision statement and a mission statement for your business, this will really help ground you in, you know, making good decisions and understanding what your goals are for the year or the season that's ahead. So I always liked to first set my vision and mission statement. So as a farmer, my mission statement was providing the best possible local ecologically grown produce. And that really like guides how I show up every day. And then my vision statement is more of like something that's long-term and that I'm sort of like working towards and is kind of our North Star. So standing for food justice, trading land for vegetables, and inspiring folks to reimagine urban spaces. So very broad, as you can see, but it really helps to like guide all of our goal setting. And then when you're planning your financial goals, I always recommend like starting kind of further out. So I like to start at, you know, year 3 and then work backwards. So an example could be if you wanted to earn $100,000 in after-tax profit. This example is kind of more specific to like the type of business I'm doing now, but let's say I'm trying to do online courses, consulting and mentorship, but this could look for you like maybe farmers markets, your CSA, and like maybe you want to build an online store. You can have a goal in year 3, and then you kind of work backwards to break this goal down in terms of understanding how you can get there. So maybe 3 months from now, you need to get $10,000 in grant funding. 6 months from now, you, in my example, launch 1 course, but maybe for you, it's launching a successful CSA with like 30 folks. And then in year 1, you have an idea of how much income you want to be bringing in every single month. And then that helps you build up to year 3, where you have this sort of overarching goal of bringing in a certain, you know, maybe revenue or profitability for your business. And I really recommend kind of trying to get like the most specific as possible. So some examples of like a strong financial goal would be earning $20,000 in revenue from farmers markets in 2023 by selling at 10 markets and averaging $2,000 in sales per market. And you can see how specific this is, right? Like this allows me to take this and I can just plug it into my spreadsheet and really build out a strong financial plan from there. And I also recommend thinking about the fact that like your business goals shouldn't only be financial. So in my business, we always like to set 4 different categories. So like we would have an operations goal. So for example, maybe you want to bring on an employee for the first time, or you had some idea of like selling a new product or something like that. For financial goal, maybe you have a profitability or revenue target in mind. A personal development goal could be something like learning more about like integrated pest management, or if you're starting a restaurant, maybe it's like learning specifics around a new dish that you're putting on the menu, something like that. And then a personal balance goal, I think, is really important because you're going to want to integrate this into your financial planning. So let's say your personal balance goal is to make sure that you're able to take a vacation in August for 1 week. It's really important that you're aware of this and that you're communicating it to your team and just being really upfront about like what your goals for your business are. And remember that like you need to support yourself as well. And maybe that means taking off weekends or making sure you're making enough time for vacation. I think when we're just getting started in our business, it's so easy for us to kind of push off our own personal goals or things that we know we need to support ourselves. But by prioritizing that, it will allow yourself to really show up better for your business in the long term. So coming back to the financial cycle that we have here, this is where you really get into the planning and budgeting side. So what I would recommend is starting to think about strategic planning for your business and really thinking about how you can start to play with some of the numbers. So there's two sort of ways you can do this. The first is what's called a top-down goal. So it's understanding the trends of your business and then setting high level sales and profit targets. So an example could be earning $50,000 in profit to support yourself for the next year, and then grow this by 20% for the next 2 years. And then the other side of that would be making sure that it builds your production plan. So if you're a farmer, your crop plan, or if you have livestock, your livestock plan can really meet this overall goal. So what it looks like is matching it to, your inventory plan, your production plan, and your crop plan. So we, as a market gardener, I would always have a crop plan that I'm working on in the winter. And then I also have a financial plan, and I just always try to make sure that the two marry up. So it's really important that if I have a sales goal of, let's say, making $50,000, I need to make sure that in my crop plan, that can translate to $50,000 in sales. Otherwise, my financial plan isn't going to really make any sense. And my crop plan isn't really supporting my overall goals. And that will allow you to kind of play with the two. You can understand if your financial goals are, $100,000, but based on your production or what you're able to do in your restaurant, you think you can only make $50,000, then there's kind of a disconnect there. And so the work you have to do is understanding how you can kind of build up a production plan to meet your overall goals there as well. So this is where, as I mentioned, you'll want to start thinking about your financial goals and your business plan. And I really recommend just playing around with the numbers. So building yourself a spreadsheet. You could just do something as simple as setting up the different areas of sales. Maybe you set it up by month like this. And then, starting to really break down your different areas of sales. So maybe you sell online, maybe you have a farm stand, and then maybe you have something like a CSA. And then you're really starting to think about okay, specifically how much am I going to sell in each of these areas, and what are the different things that are driving my sales here? And then this will allow you to really build up a strong plan. And it will look similarly to what we did last week, which was building kind of an operating budget and getting really specific about how our sales and our operating costs look as well. So where I would recommend that a lot of you go from here is first understanding your sales. So thinking about what your targets are, what your goals are, and then how much you would like to grow over the next while, and then break that down by the different ways that you sell. From there, then you'll want to understand what are your different costs of production. So we worked on this a little bit last week, but you'll probably need to make some assumptions around what that will cost and what you need to consider. And then the last piece is your operating expenses. So trying to think through do you need to increase any of these expenses, or are there any areas that you can become more efficient as you start to grow your business? And this is kind of what it would look like. So if you already have a business that's running, you could fill in what your actual sales and costs were for the first 2 years, and then you can build out 3 years of targets as well. And then I would just recommend starting here and then looking back on your crop plan or your production plan, or if you have an inventory plan for whatever type of business it is that you run, and then just making sure that your targets are realistic compared to what you're actually expecting to do for the year as well. I think maybe we will end here. There's sort of one more area that I just wanted to chat through, which is talking a little bit about what to do when and bringing it all together. So I'll send these slides out, so don't worry too much about taking all of this information in, but I would recommend looking at this last slide here. And it kind of breaks out what I would think about doing when through this financial cycle. So On a daily basis, you're trying to automate as much as possible. You have regular sales and expense transactions that are happening. On a bi-weekly basis, I would always check in with my cash flow. So I think earlier Judith mentioned that was, an area of stress for her and her business. So I would be checking my account balance and just making sure that if I understand what payments need to go out the door in the next couple weeks, I feel confident that I have the cash flow to support and do that. And then also just thinking about like if there's anything that's going to change your projections or the budget that you've set for yourself so far. And then on a monthly basis, the biggest takeaway I would say is that you're always wanting to tell the story of what happened in that particular month with your finances. So for me, that looks like I'm comparing how I actually performed compared to what my budget was, and then understanding what drove and what changed some of those things. And then on an annual basis, I'm, doing some of that tax work that we talked about. I'm looking at my income statement and trying to see if there's any red flags or anything I know I want to change for next year. I'm comparing things against my budget, and I'm just making sure that I'm reviewing my prices and thinking sort of through anything that I can adjust for the following year. And as a farmer, I always like to really spend a lot of time in the winter doing this type of work so that I can kind of set myself up for success during those really busy months, and everything's kind of just like running itself, and when I don't have a lot of time to spend on the financial side of my business. So I'll definitely send all of this information out, and then we also have one more session next week where we'll talk a bit more about cash flow. So we'll get more into the specifics of financial planning that we didn't have as much time to do today, and I'll go through like a really detailed example of how you could actually track your cash inflow and cash outflow and be able to see and make sure that you have a positive cash flow through your full year of operations too. So that's what you can expect for next week. If anyone has any questions too, maybe I'll pass it back to you, Dee, but please feel free to either come off mute or put things in the chat. And if you need some time to think about it, definitely come out next week, and you're always welcome to ask questions on previous topics that we've covered as well.
Yeah, definitely. So if anyone, this is really just a time for anyone who has questions, but anything really that Maddie went over today, you're welcome to unmute yourself, type in the chat. Yeah, this time is for you guys.
I'll make sure that we send out all the slides too of everything that we've covered today. And if there's anything that kind of comes up for you between now and next week, please feel free to bring some questions next week as well. We can always make time for that.
Yeah, definitely. And while people are maybe thinking of questions, I will put in the chat our survey for the session. So just, event evaluation, your thoughts on the workshop. They just help us to create the best workshops possible that are the most benefit to everyone. So it's just a Google Doc, and yeah, you can click on it there. You don't have to fill it out the second, but it's generally good if you have it in your mind to fill it out while the session is still on your mind. So yeah, and we'd greatly appreciate that as well. It helps us put on the best workshops possible. Okay, awesome. Well, if there's no questions, then feel free to interrupt me if there are. I will share the last few slides just on the next workshop that Maddie will be giving. She already explained, but it'll be all on cash flows and different ways to navigate this, and creating some practical tools that you can use to create some projections. So excited for that. And then we always like to highlight our Real Assist Mentorship program. So this supports individuals who are looking for some more one-on-one support for anything to do with their business. That could be business planning, financial planning, marketing, things like that. We're looking for a little bit of support, so you can contact us if that's something of interest to your organization. And then we also like to give a big thank you to our funders and partners, organizations that have supported the fund, and without which we wouldn't be able to provide awesome sessions like this with Maddie. And as always, a big thank you to Maddie for imparting her wisdom upon all of us today. As always, I learned so much. So so grateful that she's able to come and join us today and provide some learning opportunities and tools for all of us to be able to use. Yeah, I think that's it. Contact information is here for anyone who is not already in contact with the fund and would like to. You can reach us through email, website, or social media.
All right, thanks so much for joining, everyone.
Thanks, everyone. Have
Thank
a
you.
good rest of your day.
Okay, thanks. Bye.
Thank you.